Hey everybody, how's it going today? Well, because of the uncertainty surrounding the election, it's no secret many investment funds have been reluctant to be buying a lot of stock, and especially speculative companies. But Ark Invest has been using this weakness to load up on this company, and they were buying it hand over fist. In this video, I'm going to tell you who this company is and exactly how much they were buying. I'm going to give you my thoughts on the company, plus my take on the overall market, now that it looks like we have some direction since the voting is over. If you're new to the channel, I like to find short-term and long-term trading and investing opportunities in typically lower-priced stocks. I like to find undervalued, underappreciated stocks with high growth potential and talk about all other things finance-related as well. If that's something that interests you, please consider subscribing so you don't miss any future trading and investing ideas. And also remember that I am not a financial advisor, so please do all of your own research before buying any of these stocks. Now, before the last couple of days, the market had been falling and many funds had been trimming positions because of the uncertainty of what might happen after the election. I trimmed a little bit of my stocks, but one that I'm still holding is IPOB, which will become Open Door once the merger is complete. One thing I did notice during the recent sell-off is Ark Invest had been taking advantage and buying IPOB quite heavily. Now, if you go on Ark Invest's website, you can sign up for their trade confirmations, and here are the trades that they have been making in IPOB, and they've all been buys. I've noticed that they've been trimming some of their speculative holdings going into the election, but not IPOB. On October 26th, they added over 280,000 shares. Now, on October 27th, we can see that they added over 142,000 shares. On November 2nd, they added over 167,000 shares. And finally, on November 3rd, they added another 126,000 shares to give them a total of over 716,000 shares purchased over the week. Now, in case you're not familiar with IPOB, they are merging with a company called Open Door, and this is going to be the second special acquisition company brought public by well-known venture capitalist Chamath Palihapitiya, with the first one being Virgin Galactic, ticker symbol SPCE. Now, he's on the cusp of bringing Open Door public, and Open Door will feature one of the world's best growth narratives throughout the 2020s. Now, this article says, in short, Open Door is an e-commerce platform where customers can buy, sell, and view homes online. For all intents and purposes, Open Door is the future Amazon of the real estate market, and this $1.6 trillion market is ripe for significant and widespread digital disruption over the next 10 to 15 years. Among this disruption, Open Door will grow by leaps and bounds, and IPOB stock will soar like Amazon stock has soared over the past 10 to 15 years, according to this article. Now, if you've ever sold a home before, you know it's one of the worst processes you can go through. I've sold two, and actually one went incredibly smooth, but the other one was an absolute nightmare. Now, this process, more often than not, takes forever, usually about 3 months to close the sale. It costs an arm and a leg, and with agent fees, staging costs, closing costs, and selling concession fees, it often takes out more than 10% of the sale price of the home. It's highly complex with an average of 6 counterparties per one home sale, and it's terribly volatile, as 20% of potential transactions fall through due to inflexible timelines, buyers backing out, and financing delays. Now, from start to finish, the process is costly and timely, and I'd venture to say that selling a home is the single most inefficient retail process in the world today. And of course, this begs the question, why is it so inefficient? Well, that's because the real estate market is still stuck in the Stone Age. We're already seeing how Tesla is disrupting the way that cars are purchased, so why can't the home buying process be next? Now, Open Door is the first mover in this e-housing market, and as a result has established enormous early market dominance. The value proposition is unmistakable. Selling your home through Open Door is faster, cheaper, more convenient, and offers more peace of mind. Open Door's digital platform for buying and selling homes simply offers a significantly superior shopping experience to the status quo. And to that end, Open Door will follow in Amazon's footsteps and digitally disrupt the entire real estate market over the next 10 to 15 years. All right, so how can Open Door disrupt the traditional real estate business? First, they have an edge when it comes to listing fees. Now, while fee structures in other industries have gone down because of technology, a 6% listing fee remains the norm in real estate, but Opendoor's lower listing fee of 5% offers a tremendous value. Secondly, there's the convenience factor. Instead of listing with a traditional realtor and waiting for a buyer to make a bid, Opendoor gives you an instant quote for your home. Now, what does this all add up to? The potential for Opendoor to grab a commanding share of the $1.6 trillion U.S. real estate market. The company's own conservative projection of 3% market share means it could become an almost $50 billion a year business. Now, I personally think this type of home buying will catch on faster than most realize, and I could easily see them owning a 5 to 10% market share by the end of the decade. Now, this has nothing to do with IPOB, but I recently read an article that I found interesting, and it said, back in February, Cathie Wood, founder of Ark Invest, made the extremely bullish case for Tesla shares to reach $15,000 a share. She says buying now is going to be like buying Amazon 20 years ago. Now, after the 5-to-1 split, that would convert into a $3,000 price target today, and Tesla is nowhere near that at the moment. But it has had an astonishing run, rallying over 400% year to date. And as you can see, Wood's fund has understandably risen nicely along with it. Now, the outlandish call was a genius move for two reasons. Number one, it was so bold it could not help but make headlines and bring attention to her company. I once heard someone say about the movie Super Size Me that if Morgan Spurlock wouldn't have McStuffed himself and only gained 5 pounds for the month, then nobody would have noticed, and that movie wouldn't have been so successful. And of course, the second reason is because she's well on her way to being right. Now, because of this attention and success, investors have piled into her funds, and they have recently bought up the Innovation Fund in particular. And as funds under management have surged around tenfold since 2018, this is yet another example of a mania bubble, and we might as well strike while the iron is hot. All right, folks, well, let's get right into the charts. The first one I'm going to bring up is the daily chart of IPOB. And as we can see, it has been rallying the last several days with the market. If we look at the 26th, this was the 27th. That is the 2nd, and that is the 3rd. I haven't seen the information for yesterday yet, so I don't know if Ark Invest was buying that day, but it looks like they were scooping up shares the whole way down, and they are looking pretty good so far. Let me get these things out of the way. But it looks like the next area of resistance, we have to go intraday, and yeah, it looks like it's probably going to be this 200-day simple moving average on the hourly chart. We can see that the last time it came up to that, it hit it and reversed. But I am thinking that the market is going to continue to rally. I can't imagine the last couple days that we've had in the market we're going to lead to a false move. So I'm guessing it's probably going to break through that pretty easily, but we will see. Let's go to the market real quick. Let's go to the NASDAQ. Let's go back to the daily. And this consolidation that I drew a couple days ago, we can see that it is already blasting through the top end of it. So whatever happened during the election, the market liked. I was wrong in my assumption that we were going to get a sharp move down, so I'm glad I didn't buy those puts. The market was acting funny, so when the market's acting funny like that, you know, there's no rule that says you have to take every single opportunity out there. If it's not feeling right and it just doesn't look like it's going to happen the way that you expect it, there is no shame in either passing on it or getting out of the trade. I mean, if the risk-reward opportunity isn't there, even if you, say, close the trade out at a small loss and for an unforeseen reason it takes off and it would have made you a big gain, you know, if you're being smart with your money, sometimes that's just going to happen. Because more often than not, when you get this feeling, once you get a little bit of experience in the market and you get a feeling like it's not going to go the way you were thinking, believe it or not, more often than not, it does. So, and since the market looks like it's blasting higher, I am going to start looking for buying opportunities again, because the way this is shaping out, I highly doubt it's going to reverse and blast through the bottom of this consolidation and head down. I mean, it could. I don't think we're out of the woods yet, but just the way the market has been acting, especially if I zoom in a little bit here. I mean, this was a bigger volume day. So that's institutional investors piling back in. So I'm guessing we're probably going to be out to new highs before too long, and we should be rallying. But like I said, that is just a guess. So don't hold me to it if it does get reversed, because anything can happen. But the next chart we're going to look at is everybody's favorite, Nano Dimensions. And this one is making me want to kick myself. I'm still not in this stock. But once I saw it reversing off of this support area that I had drawn a couple days ago, I was thinking I should get in the stock. But because of all the uncertainties surrounding the market, because of the election, I took a pass on a lot of trades. But congratulations to all you folks that are still in Nano Dimensions, because it looks like it's finding support and it should be moving higher, because this is a very nice hook up. And if I zoom in a little bit, you can see that it isn't happening on extraordinary volume, but it certainly is higher than the average of the last 50 days. So that is always a good sign. And the trading day is not even over yet. We still got about an hour left. And you typically get a lot of volume in the last hour. So hopefully Nano Dimension continues to move higher. Let me look at some of the other ones that I was showing the other day. But if the market does turn around and go down, Fastly is going to be a very nice short. Right now it is moving up into resistance, but you can see that it is moving into resistance quite weakly. Not the weekly time frame, but weak. I would expect it to have been stronger than this, but it has been selling off, so it is a weaker stock. If the market does turn around and roll over, this could be a very nice short, and I'm going to keep that one on my list. One of the other stocks that I brought up the other day, it could be a market leader, was NVIDIA, and we can see NVIDIA is almost out to a new high already. So NVIDIA could probably be another leader if the market breaks out to a new high. It looks like it should be. If the market does break out to that new high and start running, I think NVIDIA is going to be there leading it higher. Another one that I noticed was Google. Google is already breaking out to a new high. And these are the ones you want to keep an eye on when the market gets out of a period of uncertainty. The leaders are the ones that are the strongest going into it, because they usually are the strongest going out of it. But let's look at NFLX. NFLX, Netflix is moving up towards the higher part of the consolidation, and it wouldn't surprise me one bit if that one breaks out to a new high. It's now breaking above the 50-period simple moving average. Another leader that it seems like it's doing well is Sherwin-Williams. Sherwin-Williams basically went sideways during this market weakness, and that one is breaking out to new highs already. So people must be painting the hell out of stuff. But oh, and another stock that I have that I didn't touch on the other day that I was watching was Uber. I own this in my retirement and in my M1 account, and I sold half of my position off in my retirement in the mid-30s. Now I'm wishing that I was still holding on to that whole position, but hey, you don't know what's going to happen in the future. And the reason why they are gapping up along with Lyft, because if you haven't heard, they won their court hearing in California, and they don't have to classify their employees as employees anymore. They're just as contractors. So that is good news for those two stocks. Sorry about my little bubby over there. But let's go take a look at the diamonds. Take a look at the Dow real quick. The Dow is moving up towards a new high as well. Let's go look at the spiders for the S&P 500. And the S&P 500 is right there as well. So whatever happened in the election, the market is liking it, and I'm going to start building my watch list, so keep an eye for that for stocks that are probably going to be doing well out of this breakout, and I'll be posting that for you guys, so make sure you stay tuned for that. All right, folks, well, those are my thoughts on IPOB, why I'm still bullish on it, and apparently so is Ark Invest. If you have any comments on IPOB, if you're still holding it, or any of those other stocks I talked about, please leave in the comments section. Do me a favor and like this video if you enjoyed it, and subscribe to my channel if you haven't already. Thank you so much for watching my video, and until next time, take care, everybody.